Hi, everybody. Hope you're doing well. Hope you had a great week of trading. Today, as usual, we're going to cover this week in the Qs, or essentially the NASDAQ-100 for the week of July 19th, 2020, or next week. Let's just jump on into it. So, our earnings scoreboard. So, this week we talked about, or last week we talked about BNY Mellon, who announced this week on July 15th. So, our prediction was that they would beat estimates, that they would crush estimates, and they did. They beat estimates, beat EPS, beat earnings, so on and so forth. But and with the rest of the banks, we talked about the banks generally doing very good. The JP Morgans crushed it. The Goldman Sachs crushed it. Talked about how they would have a great week. Yet the macro conditions would not allow them to accelerate. And that's exactly what happened. So BNY Mellon is the exact reason why Preptogrow does not bet on earnings. And it's a bet. It's a shoot. It's 50-50. BNY Mellon had a good quarter, a down year over year, though, but beat expectations. But their stock is down 1.8% for the week. Well, there's nothing you can do about it, right? So this is the prime reason why we do not bet on earnings, because stuff like this happens, and we try to take risk out and just really focus on recommendations that are going to occur over a stable period of time without a whole lot of volatility that occurs during earnings. And again, earnings, incredibly risky. Again, not to beat a dead horse. BNY Mellon, perfect example of why you don't bet on earnings. So let's talk about the rest of the week. So this week, QQQs were down 1%. We predicted a small bear, which, being down 1% is essentially a small bear. We think anything greater than a half a percentage point to 2 percentage point falls with a small bear. And there's a pullback. Certainly started off rocky, midweek went up, towards the end of the week dropped. And we think that this will continue on for at least the next week, that there'll be a broader pullback, getting ready for going into earnings. And earnings season starts next week. So year to date, QQQs are up 14%, which is a great return for anybody at any point in time in the year. So 14%, great return for the Qs. Should pull back a tad more over the next week to 2 weeks. So just get prepared for that. Also, as we talked about for the last 2 weeks. Our forecast, we're expecting to grow 39% over the next 18 months. Week over week, it pulled back 2% of our forecast did. We see some leveling off. You can slightly see it in the graph, up above, and then the last 2 weeks kind of a tapering. So we're thinking it's just seasonal, nothing major, but still growth rates are looking great. And we'll talk a little bit about that as we look into the next couple of weeks. Analyst forecast, they remain completely flat. No changes, which is unusual. Usually they change week over week. But for the Qs, they've been pretty flat. So I think they're pretty comfortable with where they're at. There's some macro conditions going on that's probably having them shy away from making any more bullish estimates for this, but Qs are doing well, very well. So just some housekeeping. Preptogrow is going through a funding round. You can see us at wefunder.com/Preptogrow. If you're interested in becoming a part owner, investor in Preptogrow, we would love for you to join us on a journey to disrupting the $1 trillion robo-advisor, financial advisor space. So let's talk about next week. Continuation of the bear cycle. A little bit better than last week in terms of volume, compare bull volume to bear volume. So it's starting to do a shift. When we look at the next slide, it looks like things are going to bounce off in mid to late August. It'll start to go back up again. Reasoning. The FAANG Pluses are crushing it. They're doing real well. And is the primary reason why the Qs have not dropped more than they are. Things with Facebook, Amazon, Microsoft, etc. They've been doing really well. And about 9 to 15 of them make up roughly 65% of the total Q space. And the big boys have been doing real well. So that's certainly prevented a further pullback that we are projecting from happening. Qs generate a slowing outside of the FAANGs. So will the FAANGs continue to accelerate, or will they be essentially a pullback? But if we look at FAANG stocks collectively, those FAANG companies, again, Amazon, Google, Apple, Netflix, Facebook, they're up 12% for the year. In the last 6 weeks, I should say collectively. And their growth generally from corporate growth is up 7.5%. So they're certainly, again, leading the Qs up. However, the rest are not growing as rapidly and are slowing down. So the question is, will the FAANG continue to pull them up, or will the non-FAANGs pull them down over the next couple of weeks? So that's something that we'll have to watch. Another caution, it's earnings seasons. It's starting next week. It's just a taste of what's coming with Intel and Netflix announcing. And the week after that, everybody announces. Microsoft, Amazon, Google, they all start announcing. So it's real earnings seasons. August vacations, there's always a typical seasonal slowdown in August. So just be aware of that. Not a lot of movement occurring. So don't expect big gains and bumps in traditional NASDAQ-100 type stocks. Macro conditions are still a huge concern, and that's what's dragging things down right now. Inflation, certainly there's some reasons around inflation. Things such as like car rentals are way up. But inflation rate, generally, when you look at, call it the take-home basket of groceries, those things are also way up and causing inflation rates to increase. So inflation is not great for anybody. It's up 6% for the year, I think. Others is that the stimulus is ending, and we'll see what the true economy is at that point. So those are the big concerns that are going to be coming over the next 3 months or so. So let's jump into the cycles. So we're starting into a bear cycle, or 3 weeks into a bear cycle. You can see that for July bear, we had a June bull and we had a May bear. So we got those two right, the July bear. We're middle through it, again, 3 out of 4 weeks. You can see we start tapering it off, and then we're starting into a bull starting to really kind of start to ramp up once the pullback occurs. So good stuff. Just a little bit seasonal right now. Again, we're expecting that we'll go through the bear for the next 2 weeks, and then we'll start to shift into a bull cycle towards the mid to end of August. So upcoming earnings, like I said, this week is just a taste, or this coming week is a taste with Netflix and Intel. We'll cover those two. Last week was BNY Mellon, and unusual option activity was Tesla and Cadence. Again, BNY Mellon beat all their earnings estimates, but is down 1.8% for the week. Again, reason not to bet on earnings. So let's just jump into Netflix and Intel. So let's start with this is Preptogrow. So this is the application itself. So we offer really two primary subscriptions for Preptogrow. We offer a portfolio where we build you a portfolio of 10 recommendations and you track it. This provides auto trading services as well as your own buy and sell. So if you like a stock, let's say Applied Materials, you just click on it and you say buy, and I'll buy the call for you and handle all the complexity of the buy and sell for this. Or if you're an active trader, we have hundreds of recommendations come out a day, so you can take a look at what you want. You can build filters and screens off of it, depending anything you're looking for in terms of, don't want puts, what's the gain potential, is it moving during the pre-market for options, and if so, by how much. I believe we're the only company that actually makes predictions about what the option prices are going to be when the market opens, and things such as, what sector they're in, ETFs, market cap, forecast DPS, so on and so forth. So this is for active traders. But let's just jump into the three that we're going to cover this week. So again, Netflix, Intel, and OVO Pharmaceuticals. Clearly, an OVO is not one I talk a lot about. But they are unusual option activity for the week. So let's just jump into them in order. So in OVO, pharma company, DNA cancer. They are crashing for sure. They aren't announcing any earnings. I think they've published their next earnings date. But we're very good at predicting for them. So, 5 days is 82, 30 days is 92.5%. So pretty good at the predictions on them. Volatile. So we actually didn't kick this out. Anything that we think has this high of a predicted gain, in this case, we're projecting that their stock price is going to go down by half. We tend to avoid it just because it's too volatile. There's too much happening on it. There may be some gaming on it. And so we don't typically recommend it, but if you're an active trader, you see all these. So if you want to play it, you can, but we won't recommend this to like a portfolio subscriber. They've had a volume to open interest rate of 21, which is just insane, insane. It's a cheap one. It's been crashing. And this is for the 8/13/2021 option expiration, which is an unusual date. Usually it's 8/15, I think. But it's for puts. Strike price is at 550. It's cheap. Last trade price was for 10 cents. And the strike is at 550. So just this is the unusualness, right? So 1600 option volume to 80 open interest. That's a very unusual change. Let's look at their technicals to see if it justifies this. So they're 826. I mean, it's not that bad, right? I mean, they've been certainly pummeled over the last 52 weeks. Went from 28 down to $8, so that's not great. Will they continue to go down? I don't know, maybe somebody has some inside information that's bet big. Or somebody assumes something's going to happen or bet big on it. But Inovio, this is our big unusual option volume play. This is from today, 7/16. We have good accuracy around, when the stock price goes down, 92.5% is good. On average, it takes 14 days for Inovio to hit its 15% gain for an option price. So always be cautious on unusual option activity. It means you're following somebody and they may have data or not, good or bad. So always be cautious on the unusual option activity plays. So let's jump into Intel. Obviously, I love Intel. It's sad that they're getting crushed over the last couple of quarters. But Intel is announcing their Q2. We've been tracking them for a long time now, almost 10 years. Intel is clearly a chip manufacturer, and they're behind. For inside information, I've started my career off at Intel, loved working there, have a mentor that kind of brought me up through my career there. Great people that have worked at Intel, but are struggling. They've had a lot of challenges in the past few months, getting beat by AMD and NVIDIA to some extent around the technology side and are behind. However, Intel stock is up 4.5% year to date. Analyst expectations are up 22.5% year to date, meaning that they're expecting the stock price to hit into the mid 60s. Is there a disconnect here between what analysts are doing and what's happening in Intel, or are analysts too bullish on them? I don't think so. Intel is at an all-time corporate growth since we've been tracking for almost 10 years now. We've never seen them grow this much again, since 2011. So they have a ton of growth happening. The biggest concern, let me take a step back. So if we look at the stock price and if we look at their growth projections, that always fits our Preptogrow algorithm sweet spots. It looks for these kind of recommendations are extremely ecstatic when it finds them, and it'll recommend them. Big concern though on the algorithm side is that because of so much growth, and they haven't been doing this kind of growth for years, what does that mean? Have they lost too much ground? Is there a turnaround possible? And so when it comes to earnings, the key is going to be all about future guidance. If that is not great, it's not going to be great for Intel. So they have to have good guidance. Also, with the amount of significant spend, the algorithms are kicking out concerns around, will they fall short of earnings per share? Costs are going up. Obviously, that impacts profitability and the earnings per share. So the algorithms are kicking out that potentially Intel will miss their estimates for earnings per share. And so if there's a bad guidance and they miss on an estimate, not good times for Intel. Option activity, there's not a whole lot of options. Volatility around them or unusual option activity. This is probably the most. This is, I think, from today. And this is an October 15, 2021 call. Again, cautious on the calls going into earnings. This is the most option activity that we've really kind of seen over the last couple of weeks that had any kind of real meaning. Again, October 15th, expiration date of the 60 strike price. It's pretty cheap. It's about 140, 135 current option price. So it's a cheap buy. Intel, if we look at the success rate for this, we're not great at the 5 days, which typically is an indicator that Intel takes a longer time for its stock to grow up. in terms of a call or a stock perspective. But the 30 days is really the sweet spot where as you can tell, the average is 38 days, worst case to the gain. 83% is pretty good for a stock, not great for a call. So if you want to play Intel, our recommendation is play stocks. 83% is within our sweet spot for stocks, but too much risk for us for options. Let's look at some more technicals. I mean, look, it's flat. 200 days, it's just flat, flat, flat. It's bounced around between 43 and 68 over the last year. But, you know, the 200-day moving average, 20-day and 5-day and current price, it's all really, really flat. So Intel, to sum it all up, we think future looks very good for them. We think the short term is a lot of risk, and this quarterly announcement is going to be big for them. With the new CEO, with the rapid corporate growth, they've got to have good future guidance, or it's going to be not a good time for Intel. So let's jump on to Netflix. Again, I love Netflix too. Been using them since the DVD worlds where they were dropped into your house. They're announcing their Q2. We've been tracking them since 2016. They're based in Las Vegas, California, my hometown. Love that there's a big company like Netflix there. There's a few others, but Netflix is by far the biggest. Stock-wise, they're down 1.3% year to date. Analyst expectations are up 1.2% year to date. So they're right where they should be, to be honest. Their stock price is where it should be. So we don't, in terms of, is there going to be a pop over earnings? Let's talk a little bit more about that. So while Netflix is showing life in terms of their corporate growth, it's not an all-time high. They've been challenged over the last couple quarters. They've had quarters where they missed expectations or hit expectations, but been really kind of fluctuating. I think it's a bad sign, and the algorithms are kicking this out as well. I personally, this is my personal opinion, this is not the algorithms talking, I think it's a bad sign that they're going to go into the gaming space and announcing that going into earnings. Usually when somebody does a pre-announcement like that, it's not all sunshine and roses for them going into it. To be honest, we haven't really seen it to be great. We could be wrong, or I could personally be wrong, but it's not good that they're going in the gaming space. I understand that they have to grow. It's becoming more competitive, and I'm sure they're losing market share to like Disney Plus or Amazon Prime and all of those other companies that are doing real well. I love Disney Plus right now. Actually, I love that more than Netflix, to be honest. So they're challenged. Moving into the game industry from a gamer view, which is I am a gamer, it's not a great decision. It's like when Google did it and they couldn't do it and they failed a bunch. Now, Netflix may be a different beast, but I don't think so. The competition space is harsh. You know, everything from boutique shops to EA, to Activisions. How do you compete against them? Or how do you become a platform which they want to publish their games to? Also versus Xbox, Steam, PS5. It's just a real tough market. Talent-wise, creative talent is you need as well. Cost and game development is as high as movies, so it's an extremely cost-prohibitive market. And the audience, to be honest, for gaming is more fickle than my 7-year-old trying out new foods. You have a game out, it's really hit or miss. It's not, and you expect that this game will be used for months. And the reality is, if it's a miss, you're never going to play it, and it's going to bomb out. You never make a return. It's not like a movie where the first weekend they'll make up a lot of the returns. Gaming is all about in-game transactions now and making money that way. And if a game bombs, and it's not good. I think it's not a great sign or a great decision to Netflix to try to get into gaming. So when we look at all these things combined, from an algorithmic perspective, it's saying it's going to be a tough quarter for them. They're going to miss estimates. This is a put on it. We recommend them a lot. We're 3 out of 4 on the 5-day and maybe 8 out of 10 opportunistically or optimistically on the 30-day. They've missed a lot. This is the one that had the most unusual option activity, I believe. Netflix, not a lot of unusual option activity. If we're talking about like Tesla for next week or Microsoft, there's a lot of option activity. We'll talk about that next week. But this is the most option activity, at least the most open interest and volume that we've seen over this week for this specific expiration date, which is 10/15, at a strike price of $5.40. Their earnings, this is off. They're actually announcing next week, not last week. Let's look at their technicals. They're up. They were up. Now they're down $12. This is on opening, so they dropped $12 from the day. They've had a pretty tight range, 458 to 593. But again, they're down for the year, 1.3%. Sum it all up, we don't think Netflix is going to have a good quarter. Going to gaming, not a great decision. So let's wrap up the week. Again, next week, Netflix, Intel announcing. We think Netflix is going to be challenged, missed earnings. Intel, a lot of future guidance is needed, and they may miss earnings per share estimates just because of the rapid growth. And if they can combine the story, they may have a good announcement. But generally, Netflix, Intel competition is chipping away at them, and they need to do something about it. Unusual opportunity, Inovio, 21 ratio of option volume to open interest. That's pretty high. So take a look at them if you're into the volatility plays. If not, Preptogrow does this every single week. All this data comes from Preptogrow's AI big data platform. Everything we talk about is recommendations that come from this. We're not financial analysts. We're not advisors. This is all recommendations that come from Preptogrow. We hope you have a great week and happy trading, and we'll talk to you next week. Take care. Bye-bye.